Hi, everyone. Welcome to our show. Welcome to 21st Capital. Wherever you watch this, YouTube, X. Thanks for joining us today. I am talking with Giovanni Santostasi. He's the one of the top researchers in Bitcoin analytics space and uh, very well known for his power law analysis and power law model. Today we have him again. We talked a while back, a few weeks back, and it was very well received, and a ton of our audience was very, very happy about the analysis that Giovanni presented. So we are talking again after a while for a general update, and then looking at some of the research findings that Giovanni has for us about his model. Welcome, Giovanni. Thanks for joining us.
My pleasure, my pleasure. It's always a pleasure to talk to you.
Awesome.
I
So
told you before you are one of my favorite analysts. I like your focus and your rationality. You're very methodic. I love all that.
thank you very much. You're too kind. So I have your slides ready,
Yeah,
and whenever you'd like, I can switch to them.
yeah. Let's start. So I think most people are familiar, right? And we have made many different videos about. And you can start with the slides if you want. Are they visible? Um, yeah. So everybody's familiar with. I'm assuming I can give you a very brief introduction to the power law, but I'm assuming most people have heard about the power law. They saw other videos of power law, or they can easily find right in your channel or in my channel and somewhere else. What is not covered often by other analysts? I sometimes do it in my own channel, but I don't think I have done yet a full presentation about this topic. I cover it sometime in my. I have this. By the way, every Thursday I go through the book Scale. It's a very wonderful book that I suggest everybody to read. But I'm actually going little by little through the book myself, and I have actually kind of like little lectures. So basically a book club where people can participate, ask questions, everything. It's on every Thursday. We do this. In fact, tomorrow will be the next episode. I usually do it around 4 p.m. PST. But it's the idea of Bitcoin being a network and also the scale properties of Bitcoin, because they are all related. And when we talk about the power law, that is really the most essential property of a power law. This is why the power law is not just another way of fitting the data. It's not just another model. Okay, this model versus this other model. It's the fact that Bitcoin is a power law, and Sina, you are one of the people that actually confirmed this, from a very independent point of view, because you were not involved initially in this idea of a power law, and then you actually started to study it and verify that it's a power law in many different ways that finance expert will analyze it and confirm that actually indeed Bitcoin behaves like a power law when you look at the overall trajectory of a price. This
One
is why,
question, can I, if I
yeah,
enter?
sure.
So, can you make this full screen? Typically, it's too small on YouTube.
Sure, we can make this. I got here to slideshow from current slide. Okay.
Yes.
Yeah. So we make a big
I
deal
get.
in
Mhm.
physics.
I think it probably made it full screen on the others on your second monitor, but
On my second monitor,
yeah,
I don't
because
know
I
how to
still
make
see
it
the.
full screen. I just did it in my presentation. I don't know how to do it in in yours.
No, no, no. But we still see the full the older one.
Okay. Tell me if this works. Slideshow
But do
from
you have it
current.
full screen on other monitor?
I don't have another monitor.
Oh, okay. Typically, what I do this is, yeah, the second one gets full screen and the first one stays the same, but then there's a button you can switch. Now that it's not like that, so
I don't
I
have
don't know.
another monitor. I'm just using this monitor. I don't know how to do it.
Okay, so just why don't you just try the same button again?
Anything changed?
No,
Because I
it's
am
not
my screen is full right now.
really. I see
Yes.
the I see the not full one. Something
Well,
is funny is
in my
happening.
screen it is, but it's okay. We can maybe add the slides, some place where people can download them or whatever. But let me go through the presentation.
Okay.
And
Instead, you can click on that zoom button a few times so that it's so that it's a
Okay,
little bit bigger because um the plus button there.
is that okay?
Yeah, a little bit better. Yeah. Okay.
And of course, so minimize these.
Perfect. Very good.
All right. So, and what about this?
No, this is worse.
Of course.
Yeah.
Okay, what about this?
Yeah. Better.
Okay. So anyway, um, yeah. So in physics, we make a big deal about of these power laws because they are very universal in the sense that there are many different phenomena. The other day I was actually in a pub and I was talking to the person who was taking a video. Was presenting over there. We did this improvised interview with a Bitcoiner here in San Diego. We were in a pub, and then I talked with this guy, and I was showing him. Was asking. He was very curious. I was trying to orange peel him, and at a certain point, I was showing him all these different cases, of power laws in nature, and spontaneously he say, "Oh, you are telling me." I don't know which word he used, but something close to universal. That is what we physicists we use. You're telling me there is a pattern here, right? That all of them have the same form of equation. They say exactly, and they said, we physicists get excited about that because if if equation is similar, probably the property of the systems are similar. This is one of the things that we like in physics. You see many different things that don't seem to have anything to do with each other, but then they have similar behavior. And to us, in a way, they are the same thing, and we call it universal. So this is why we make a big deal. They are everywhere in nature, but also they have very, very interesting property. For example, power laws are actually the only function. Like if you are thinking about there are other things that can be scale invariant, and I will explain in a moment what scale invariant means. But as a function, that means, and by the way, let me first introduce very quickly what the power law is, right? Because even if I say I assume that most people know, let me still remind you. So basically, it's this idea that if we take the log of a price of Bitcoin in this particular case, but this will apply to any other power laws. If I have all the other power laws that we see in nature, and we can mention in a moment some of them, if you take the log of the y-axis and the log of the x-axis, in the case of Bitcoin, the y-axis is price, the x-axis is time. And I see that the data linearize, right? So it doesn't have to be exactly a perfect straight line. Many times when you look at the data, there is always some fuzziness. There is always, typically, you will see like a little cloud of data, right? That goes across your image, and then if it is in moving it, if it is stretching in a certain direction and it does it in a very regular fashion, then you can say, well, it looks like there is some kind of pattern there. And then, you simplify the pattern by creating a straight line, by calculating a straight line, what is called a regression line, through the data. And that line, it's a simplification and an idealization of your data. And you can see how close this simplification of the data comes to the real data. And there are different tools to do that. Some, you have to be careful, you have to analyze, you can go deeper and deeper. But the first level, and Sina, correct me if I say something wrong, because you are more of an expert about these stat things that I am. One of a quantity that we use to, at least initially, right? Because you can go deeper. This R square sometimes can give us, can be misinterpreted, but the easy interpretation, the simplest interpretation of this quantity R square is how well the straight line that you just drew, that is supposed to represent how the general data is behaving, how well this straight line comes to the general behavior of your data, right? There are more technical ways of saying that. How will you say in a more technical way, Sina? How will you describe the role of R square and what R square tell us?
Yeah, so R score is basically showing how well the variation in your data is captured by the line. However, as you said, this isn't the only reason you will believe in a model, or kind of the only diagnostic, because there are cases where R score can be artificially high. For example, just as very silly example, if you have 2 points on a chart and you connect them with a line, the R score will be 100%, right?
Right.
So this is, first of all, R score gives you the fit on the past data, but whether past data will the model on past data will continue to work well in the future, that's where most analysts are stuck. And I think the difference with your analysis is you look at the data, you obtain a really good fit on the historical data, but then the rest of the burden goes towards the theory of the power law, and explaining that this data is only suggesting something about the internal behavior of the system. And that makes us confident that that internal behavior will keep going. Simply because a line matches the data should not be used always on many other general analysis as kind of a predictive power. And this is what really excites me about your work, that it has a lot of theory that explains the mechanism, explains why we see
Yeah.
this pattern happening.
It's like a puzzle that you put together and all the piece fit. So I will say almost it's like a starting point. This R square is a starting point that it tells you, maybe there is something here. Maybe this pattern is not by chance. There is something interesting, and so it gives you a motivation to go deeper. Because in science we never stop. We always go deeper and deeper and deeper, and try all kind of things. All kind of tests, etc. It's never the ending point. You don't say, "Oh, okay, it's such a good R square. I'm going to do something else." No, you start from here. By the way, I highlighted here in blue the time that this particular approach has been correct in real time, because the power law has been discovered. I discovered power laws in Bitcoin all the way to 2013, but we're mostly between price and addresses that in a moment we'll also discuss, and price and transactions. This particular power law between price and time was discovered in 2018, in fact, September of 2018. It is more or less here. We were here that time. I posted on Reddit saying I discovered this pattern. And then all these years, we continue to do what the power law says we should do. It is, in general, yes, we will have oscillations, but the general pattern will move along this line. And this has been correct for 6 years. So it's something that I don't know if many people know, but basically we have been correct in real time, because this type of data is called auto sample. That is one of the strongest tests, right? Because you can always, as Sina has done things like that, you can divide the data in 2 segments, say, okay, let me take the first segment and see if I can predict the second one. But it's all offline analysis. Is much more challenging, even from a psychological point of view, to see actually that your prediction works in real time, and that's been working for 6 years so far. So it's pretty impressive, right, that this has happened. So it's not something new that we came up with, has been working for quite some time. So it's actually a powerful test of this.
Yeah, I would say this is the most important. There's a lot of other tests, but the fact that the model actually works from the time you presented it, or from the time you stopped analyzing or updating it, into the future by several years. How many years is that?
Almost 6.
6 years.
Yeah,
Yeah,
actually
that,
6 years, because it was discovered in September. So we are beyond that date. So 6 years.
yeah, that's the
Yeah.
most powerful test, in my opinion, because
And
yeah,
this,
yeah, it practically shows that the model that you would, and I did an analysis on this. I wish I had it up, that the models that you would have built in 2016, 17, 18 with no data from beyond that point would still have predicted the price right around where we are. So
yeah,
what does this tell me? This tells me that the model is not capturing noise. It's capturing some real dynamics in the data that continues into the future, and there will always be some noise on top of it, meaning the bubbles or the bear markets, but the average is continuing to be correct.
it's incredible. Also because, right, tell me, you're a finance expert, how many people have predicted something, and it's not people, it's about Bitcoin, it's not me, it's not, it doesn't have anything to do with me, it's about how organized, beautiful Bitcoin is. But tell me of any other prediction in the finance world that has been this kind of correct for 6 years, right? I think it's unique. I don't think there is anywhere else anything like this, right?
No, listen,
uh,
if we get something like 30% R square, that's awesome. So
yeah.
we don't even dream of 95%.
I know,
And
it's
6 years of out
incredible.
of sample. Yeah.
So anyway, the beauty of the power law also is that actually, it's not some complicated model, something that has a lot of moving parts, right? You say, okay, if all these banks come together and they do this kind of things, and then I take the square of that and they divide it by the GDP of this nation. That is what a model usually is, right? You have a lot of moving parts, you put them together, you give them some weights, and somehow this thing that you created that has a problem that you can, what is called overfit, you can overfit the information, because you can basically create any kind of combination of data to try to explain what you're seeing. That could work, but also it could be something that you just imagine, right? There was this famous mathematician physicist called von Neumann, that actually he was trying to make fun of one of my heroes, that is Enrico Fermi, that is another very brilliant physicist. But he was trying to explain this physical phenomena, and they had like 4 parameters. And von Neumann say, well, with 4 parameters, I can fit an elephant, and I can eat, and with 5, I can make his trunk move. And so he wanted to say, basically, by the time you add more and more parameter, I can fit anything. And in fact, actually, there is a challenge where people created like a kind of little elephant, and they actually even made him move a trunk, right? We came up with some kind of equation that can do that. It's really funny. But yeah, the beauty of a power law that technically has 2 parameters, right? The intercept, and so basically a power law looks like this: y equal a x n, right? This, first of all, is not a term that I invented, because I know there is some pushback on that, right? Or you are exaggerating the name, you are calling it a law. A law in this context means a pattern. It's a very strong, predictable pattern,
Exactly.
and it's not law with a big L, right? Also because
And like too many people are like too quick to try to debunk something that they don't really know of. And one of the things are like, yeah, it's not a law. Well, you don't even know what we mean by a law. It's a very common scientific term to talk about a pattern. And to a scientist, the fact that the pattern persists in many contexts, and also along the history in any specific context, that's very interesting. So they call it a law because it's intriguing. Not it's not a proven theory or something like um I don't know, the Newton's not laws that would be definitive and thought of as absolute truths, right? So yeah.
And even that, right? Einstein came about and say, well, the Newton's law are an approximation of something else. It means a very predictable, very reliable pattern that has been, as Sina say, observed over many ranges of possible situations, historically, and so on and so on. Because really, in reality, there is nothing like that. Nothing that is 100% sure. Even the physics patterns they seem so reliable, like an object falling down, nobody says it will never be impossible for this object to do something else. It's a very strong statistical pattern that seems not to be broken so far, and even for gravity. But you could go in a place where maybe there is some particular conditions where the object starts to live. Maybe there are strong magnetic fields that you didn't observe, right? So this is what it means. But it's a technical term that we use to indicate a relationship between two quantities where the independent quantity, right, this x, you raise it to some power, and that power can be negative, it can be positive, it can be a fraction, and it can be any number basically. And then where this relationship is called a power law. And in the case of Bitcoin, that A number is 10 to the minus 17, and the N numbers is 5.83. Now, that number can slightly change according to where you calculate it, mostly because we think there is a very precise kind of behavior, but that behavior is masked by the noise because you will have a bubble, you will have a bottom, and so it depends on where you calculate. If I calculated very close to a top, that calculation will be influenced, right, by the presence of a top. If you do it at the bottom, it will be influenced by. So the way to handle that, we did many tests, Sina included, where you can add more and more data, recalculate the value. Then you will see that it oscillates around some middle value that probably is the real value. And so you could take that as your real value, the average, or you can stick with one of these values because it's okay. What is important is to be consistent over time. And so we did a lot of tests to show that actually this value became stable over time.
So can you answer this quick question? A
Sure.
very common question. Marcos is, I'm showing the comment on the screen. I don't know if you can
Yes.
see it.
Let me
So
see.
the question is, what about the macroeconomic factors or black swans or everything else that might change? Because when you show an equation, people think now the future is ruled by mathematical certainty. And then the question is, okay, what if this happens? What if that happened? There's a lot of uncertainty in the future. How do you square these two?
Yeah. So the entire idea, and that is part of what I'm trying to discuss here, is this entire idea is that what really the power law reveals is not a precise price at any particular time. Now, you can do that, and then you can use that information to say, okay, is the price above, is below? So it gives you kind of a reference, right? In particular, imagine you didn't know anything, like it happened for most of the history of Bitcoin so far. People didn't have any clue. If the price could have gone literally to millions of dollars in a few months and could have been okay. Nobody say, oh, that is quite unlikely, right? The power law gives you that framework. It tells you, no, it's probably very unlikely that the price is going to $1 million the day after tomorrow, right? But at the same time, it tells you, well, when are we going to reach $1 million? When the $1 million will be like right now, right? Where right now we are talking about Bitcoin in the around $50,000, $60,000, like if it was just a common thing, like, oh yeah, it's so boring. Bitcoin is fluctuating between 55 to 58. Well, imagine when you were at $20 and you told people, imagine to go back in time with a machine and tell people when they were dealing with these kind of bubbles, where the price went to $30 or something like that. Oh, one day the price will be 50,000. People will think it's boring. They will think you are crazy. The majority of people will think you're crazy. So this is what the power law does to us. It's telling us what are the scale of time? Do we have to wait 5 years, 10 years, 100 years before the new price of Bitcoin, the new 50,000 will be a million, right? When people will say, oh, it's so boring, Bitcoin is just fluctuating between 1 million and 100 and 1 million 150, how long is going to take? So this is what allows us to do the power law. It's going to give us these very long-term type of changes, and it gives us a point of reference. Everything else is treated basically like noise, like it doesn't matter. Many times people say, what happens if we leave a power law, right? And I tell them, you know what? We have done it many times. Look at this. Every single bubble is actually a challenge to the power law. If we left the power law, usually we became exponential. We go somewhere, right? Sometime, like the first bubbles, we went all the way to 10 times away from the general trend, right? So we were 10 times higher with what the general trend say we should be. And then look what happened every single time. We came back. And sometimes it took, I don't have that graph with me, but we identify what is called a support line that kind of connects all these dots here at the bottom. You can calculate it in very different way. Like, for example, it's 60% different, 60% deviation from this middle trend. You can calculate it using quantile regression. You can use it trying to identify what are called the inliers versus the outliers. The inliers will be all these points that are sitting at the bottom here. They form a power law. And in fact, we think that is the real power law. And there are reasons to do that because, for example, if you look at the hash rate and you multiply the hash rate by some kind of middle cost or average cost of electricity, guess what? You come very, very close to that support line. That makes us think we need more studies to make sure that that is the right interpretation. But right now, the current interpretation is that probably that real power law that sits here at the bottom is the cost of production of Bitcoin. It is really interesting. It creates some kind of physical limitation that usually Bitcoin never goes through because the miners are not going to sell you their Bitcoins. It's going to be some kind of real physical world limitation of how Bitcoin behaves. And we have been places like this, like if you look at this kind of a V-shape formation here, structure in the data, that is COVID. That is when the price collapsed, the market went crazy. And I could almost draw it for you. Maybe I can do that. Let's see if I can do that because I don't have a slide where we actually officially calculate it. So let me draw it for you so you can actually visualize what I'm talking about. Let me see if I can make this line more visible. And let's see if I can make it bigger. Okay, here. So you see how this line, I'm doing it by hand right now, but we can do it using mathematics. It's about it's so clear that actually you can draw it by hand and you can see it's perfectly parallel to the other one. So you can actually calculate it by mathematics. You don't have to do it by hand. And you see how it kind of touches all the major bottoms, including these, where the price collapse and arrive to that particular point and then bounce back. So actually, this was almost like a stress test for the theory that it seems that there is this real power law that is the bottom line. This one is a compromise. It's a compromise between these large deviations and the general trend of probably what the real power law is. This physical limitation, this physical boundary on the price that is associated with the cost of production. It makes sense. Even Satoshi, there is somewhere some sentence of Satoshi where he said that a commodity over a long period of time will tend to the cost of production. And in this case, it seems that Bitcoin has followed this all the way, with the exception where sometime some event, whatever it is pushing the price away, but then it wants to go back. And this is our the big large events, because see, once you understand scaling, so scaling, we can go in a moment deeper in this idea of scaling. Scaling tells you that this process will have many things happening to it at all the different levels. Like, for example, these huge big bubbles are huge events. They last about 2 years. So it takes 1 year to go up, 1 year to go down. They seem smaller here in this graph. They seem last shorter simply because it's an artifact of how we are plotting time. We are kind of compacting time because we are taking the log of time. But they are kind of similar duration, about 2 years, so these bubbles. So these are large events. But you see, I can identify bubbles at all the levels. It's almost like a fractal. There are big, huge bubbles, small bubbles. But you see, in general, in fact, that is one of the tests that I did that I will show you in a moment. You can try to understand Bitcoin. So forget about drawing a line through the data. Do some other clever things to show this scaling property, where in average, yes, you can have deviations, you can have microeconomics events where they push the price up and down. Maybe, like here in COVID, they push the price down. Maybe there is some exciting news, they push the price up. There are the bubbles associated with the halving. The halving, by the way, doesn't have anything to do with supply shocks, etc. So maybe sometime we can have another episodes where we go deeper in that. But it's an event that happens on a regular basis, that is driven by maybe liquidity cycles, by the fact that there is innovation in the system. The infrastructure innovates itself every 4 years. All different kind of things. We push the price up, but then notice what happens. We go back to that black line. And so that is the understanding. And also, the power law gives us an understanding about, in general, how Bitcoin interacts with the world, with this environment, with the world in this case. And the idea is, the reason why we see the power law in the first place is that there are some mechanism that creates the power law. Otherwise, we will not be able to see it over this incredible range of order of magnitude, right? Because the log here, you see, is showing this change, this every time a change, 1, 2, 3, these are the number of zeros of the number associated with the price. So, 10, 100, 1,000, 10,000, all the number of zeros. The log basically gives us the number of zeros.
Yeah. In other words, every time we get a significant macroeconomic change, it simply takes us from one of those levels upward, like from 1 to 2, 2 to 3, 3 to 4. Like the most important thing happening in this year was approval of the ETFs, which took us all the way from the bear market bottom around 20,000, 16,000, all the way up to 70, above 70. And in that discussion, I'm including all the prior news and then the actual announcement and the new money that entered. So macroeconomic factors, definitely play a role, but they are sort of, at least on average, modeled here as well. And the way we will go from wherever we are to 100,000 to a million is exactly through all those significant macroeconomic factors that will happen, including nation states adopting and all the other big events.
If you go deeper in how power laws are generated, and you can show it mathematically, that is exactly how the equations that produces a power law looks like. It's something where, and again, I don't have here the equations, and another episodes maybe we can go, I can even make a simulation showing you how a power law grows. But in general, it looks like this. It's part, in fact, I do have equation. It's kind of a little bit looking forward in what I was trying to show, but maybe this is where I can bring this slide. And it doesn't matter if you don't follow the order, it's an important question, so let's address it now. And then maybe we can go back to the other slides that I have. But this is the answer to your question, in a sense. It's all here. It's in a big, huge slide where I try to cover everything. So what happens, right? If you're looking at how this equation is generated, why we have a power law in the first place, usually power laws are created by processes where there is what is called an iteration. So basically, imagine I have a system, and in fact, let's look at Bitcoin itself, right? So I was able to show in my studies that what we see in terms of a power law in time, right, the price versus time, is actually, it can be understood in terms of two other power laws. One power law that is how the addresses grow in time, that is this power law, and this power law, you see, these are the addresses growing time. It's actually a very smooth curve that can be fit, right, very amazingly with a power law with the power 3. And then one can say, okay, that is interesting. Is a power law is growing with the cube of time. And then you can ask, okay, what is the effect of the addresses on the price? And it turns out that is also a power law. This one is a little bit more wiggly and so on, but in general is also a power law, because you see, I can draw a straight line through the data, and it does a good job. If you calculate this R square, again, we are all in with 0.95, with 0.6. This one actually is even better. I think it's 0.97, and so on. The reaction of a price to this growth of the addresses is also power law, and that power law is 1.77. So if you want to round that, to the closest digit, this will be 3, this will be 2, and if you round the power law to the closest digit, it's 6. So it basically goes like this. It goes that they know. So if you are thinking about this as a network, because the networks are one of these examples where you have this iterative process, right? Why? Because basically, and here it's trying to illustrate what is happening here. I'm making the assumption that these addresses, yes, go ahead.
Let me show you something before you get into this discussion, because it's a great segue to what you're going to discuss.
Absolutely.
And I have found this presentation by Daron Acemoglu. Do you know him?
No, I don't think so.
He just won the Nobel Prize.
Oh, so, yeah. I'm very bad with names, so yeah, I know who you're talking about. Yes,
yeah, exactly. So interestingly, he has a lecture on networks and power laws. And what a lot of these economists do is that they show, if we build, exactly like you were saying, if we build the equations that will explain the growth of a network, ultimately it will behave like a power law at the end. So,
yes.
And this is 2009, and they actually show that many social and biological phenomena are governed by power laws, and this is a power law distribution equation. Again, it has a power, but this is in terms of the probability distribution, slightly different than what we are discussing here, but general, very well regarded scientific principle. And in the history, in the rest of the article, the presentation, they show a lot of the networks that behave like a power law, like World Wide Web. Their growth when it's analyzed on a log chart, power grid, internet, protein interactions. And the question is why so many networks behave like that? Even academic publications and citations, collaboration in mathematics. Absolutely. The reason for that is what they show is this phenomenon that's called the rich get richer. This is one way to think about it. Or any network that's bigger has even a better chance or better power to grow further.
Right, exactly. The network effect, what is called the network effect.
Exactly. Yes. So more power.
By the way, can you send me this slide when you have a chance? I'm interested myself to look at it. Seems cool.
So I guess now this kind of sets up your discussion of where the power law comes from.
And so, in fact, we can go deeper and see what is the mechanism, right? If we had to write an equation of how the network grows, how that equation will look like. You can show mathematically exactly this how it is, right? In physics, we like to describe change is one of the purposes of physics. We like to see how things change in time. And we have these equations called differential equations, but I try to simplify for you. So the first assumption I'm making is that these addresses are a proxy, because that is one of the beautiful things about Bitcoin. We have all this information available to us, and one of it is these addresses, right? And you can say, well, addresses is some kind of measure of the activity of a network. And I know some people will push back and say, well, but maybe one person comes and open 5 addresses, another person comes and create 20 addresses, right? Well, that person acts like somebody that is very active on the network. It doesn't matter. It's still a measure of active, how active a network is. So, but because we like to think about agents and people, etc., so we can make the rough equality, right? That addresses is proportional somehow to the number of users in the system, right? It doesn't matter, because in the end, if I know the relationship between price and addresses, that is what I care about. I don't even care about the Bitcoiners. To me, that is an abstraction. This is what we call in physics an observable, the quantity that actually I can measure. I cannot measure the Bitcoiners. But for an understanding point of view, it's a good analogy to say, imagine these addresses are the Bitcoiners, right? And so then what happens? How do we get this growth, power law growth in the first place? So it looks like this. The change in Bitcoiners, remember.
Can you zoom in a little bit? Now, those are now too small.
I can make it bigger. I can try to make it bigger.
Yeah, just
let me go to my slide.
Yeah, I'm thinking you're looking at it in full screen, but we are seeing the not full screen one. Yeah, okay, now it's getting much better.
Okay, let me go there. So do you see this thing here? Maybe I can even highlight it or something. So this one, yeah, it's not easy to interact with it, but the change in Bitcoiners is equal to 3. And why 3? 3 is the slope that I measure here. Okay, so you can generate this equation of addresses equal some function of time, in this case, the cube of time, by resolving this equation. The equation says the change every day. Imagine I'm going to update the number of Bitcoin. I'm going to look at how many Bitcoiners there are in the system every day. And it turns out to get a power law, you will need a process that looks like this, where the change in Bitcoiners is equal to 3, because it's the power of this power law, divided by the age. I like what you came up with, this terminology, the age of a system. It's a very good way of describing. So this T represents how old Bitcoin is. So the system that we are dealing with, the network that we are dealing with. And then you multiply by the number of Bitcoiners. You see why it's an iteration? Because the change in number of Bitcoiners depends on how many Bitcoiners there are already in the system. And this is why it's kind of like a feedback loop, right? Because now to calculate the new number of Bitcoiners, I will take the existing number of Bitcoiners, I add the change, and now I updated the system. So you can do this actually in a code. We have this in code. One of the most important elements in a code is this for loop, right? Where you say you start with some initial conditions. What is the initial condition here? Satoshi. So there was only one person in the network in the beginning, Satoshi himself, and then Satoshi, right? Imagine, in fact, let's do it, right? Let's do it. I did this example where we can go through this process. Right? I say, you start with Satoshi. I put this like he's the North Star of our world, right? It's Satoshi. This is why there is this symbol here. Satoshi was the first person, right? So if we go through this equation, he will be 1, right? So there was only one Bitcoin. How old the system was? Only 1 day, right? So only 1 day. And so we started with him, and we look at what happened after him, right? So the system is only 1 day old, and we divide by 3/1, because remember, this T represents the age of a system. So that is how many Bitcoiners Satoshi was able to involve in the first day. 3 divided by 1 times 1, because there was only one Bitcoin. So these are the first 3 people that he was able to involve. Now, remember, this is an idealization. We are simplifying. Was it 4? Was it 5? Yes, it's in average, right? We are saying in average. Imagine a process that works like that, right? So he involved these 3 people. Notice the huge big legs of Alfini. This is Alfini. I tried to make a joke where he has huge
I
big
didn't notice
legs.
that detail.
I was trying to make a joke where, he has big legs. So these are the 3 first people that join the network, right? So and now, how many people we have in total? We have 4, right? We have the 3 that Satoshi brought in the first day, included him, so 4. Now, let's calculate what happened in day 2. In day 2, we have 3, because this 3 is always the rate of change, right? So 3 divided by 2, because that is day 2 of this process, of this iteration process. We multiply by the number of Bitcoiners, that is 4. 4 divided by 2 is 2. 2 times 3, 6. So we have 6 people. These are the new people coming in the system, that are 6 people. So these 6 new people entering the system. And now you add to the next one, we have a total of 10 people. We have 10 people in total. And so you go on, right? So if you go to day 3, you're going to have 10 people total divided by 3, right? So I wrote it here because it's day 3. So 10 times 3, 10 people, 10 new people. And you continue like this. And you go on. And this is how the system grows, right? This is how the system grows. And if you plot this graph, if you make a plot, you can try. You can, anybody that knows a little bit of computer programming, you can make a very simple program to reproduce this with a for loop, right? You update your system, you take the change, you add it to the previous Bitcoiners, and now this new state of a system influences the change, right? So every time something happens to Bitcoin is always proportional to where the system is. And this is going to create, if you plot the result of this, you will get a power law. You will get a beautiful power law that is exactly, the slope of that power law will be 3. So this is how you generate power laws, by this iteration process. Same thing with all of these things. But these will be also created in this way, because what happens in this case, the price is because of this thing called the Metcalfe law. So Metcalfe was this scientist, this engineer. He was actually one of the fathers of the internet. He created I saw a lecture of him, but it's actually, you can find this lecture. He was explaining how he came up with this Metcalfe law. He created a little device. At that time, it was so early. We are talking about like end of the 80s. It was so early that you had to buy a little piece of electronics that somebody in your IT department had to put literally on your computer. And this little board allowed you to connect with the internet, the local connections of computers, but also, the nascent internet that we were creating at the time. And it was costing $1,000, which I imagine was a lot of money in late 80s. And he was selling 1 or 2 of these units, for every company was talking about. And one day he realized, he said, I can probably convince people to buy a lot of these if I tell them. So he didn't make it up, it's a true thing. He tell them that the real value of a network is not in the nodes, right? So this is a terminology we use when we describe network. The elements where everything is happening, right? The processing of information, the decision making. It can be cells in the body, it can be people in a social network, it can be computer in a computer network. So these are called the nodes. And then the connections between the nodes are called the links. Links, sometimes a more technical word is edges. And so the links, he said, look, the value of a network is not in how many computers you have, but how many connections you can have between them, because then you can do all kinds of different things. People sending emails, people connecting to a printer. That is the real value. It's the connection, right? It's a beautiful idea. And And here is an illustration of that you see. If I start with 2 nodes, well, I have only one connection. If I start with 5, then the number of connections grows. It's a little bit complicated formula, but the beauty of it, that if you increase more and more and more of a number of nodes, it tends to go that you can simplify that a little bit more complicated equation into n square. It becomes a limiting value when you start to have a lot of connections, is n square, where n is the number of nodes. So and this is under the assumption everybody is connected with everybody else. So under that assumption, the number of nodes, the number of links is n squared. So he was saying, look, guys, if you buy 4 of these units, now you're going to get back 16 times your value, because that will be the square of how many of these units you're connecting. So people realized that, and he was able to sell a lot of them. And he became famous with this Metcalfe law. Now, the beautiful thing, notice, if we are basically saying the value of a network is proportional to the links. Here, you see the value of a network is proportional to the links. And the links is about the square of a number of nodes. And notice how we're coming here empirically to a number that is very, very close. Now, in reality, you will never get 100% exactly the theoretical value. Also because, remember, this theoretical value is based on this simplification where everybody else is connected. Everybody is connected to everybody else. And then probably in a real network that never happens. So we get a number that is very close. And so to make it simple, right, because people like round numbers, but it works also with these real numbers, okay? In fact, see how I use the real numbers here. I took a slope here and multiplied it, because let me show you first why we multiply, right? Because it's going to be like this. The value of a network is proportional to the links, that is proportional to the node square. So if a nodes grow with t cube, like we say here, remember the nodes are the addresses, then I can substitute this node with t cube, and now you have to take the square of this t cube, right? And from, just high school algebra, you remember, if you have a power of a power, you multiply the power, right? 3 times 2, 6. And this is why we see this 6. Now you'll say, well, you rounded the number, whatever. No, I can take the real number, 3.17. I can take 1.77, multiply by them, and I get 5.65. The real value, when I fit the slope, it's 5.71. That is 1% difference between the measure of a slope here and the slope derived by assuming that this one is the product of these two. That is pretty amazing, right? Don't you find that really cool and interesting that
Yeah,
we get
both.
this result?
It's like 2 theories working at the same time, which is even harder to find in regular research.
Yeah, and all these, you see, also, like I say, it's like a puzzle you're putting together. It's not that they are weird property of something else. They are network property. This is one network property, that networks grow as power laws. Like you say, that is very typical of network to grow in that way. I also found papers where they describe that. In fact, they took a real social network. This is where some Chinese scholars, they look at Weibo, WeChat, many different types of real, sorry for this, different type of real networks. And they show that both the nodes and the links grow as power laws. They actually look at real cases, and all of them were growing as power laws. So we see all different pieces coming together. There is another piece that is very interesting, that viruses, for example, viruses under certain conditions, they grow as power laws. And in fact, when people try to understand how virus spread, they use network theory, because it's basically a question of how people are connected with each other, or different animals are connected with each other. So the spread of a virus can be described by network theory. And we have power laws in this spread of the viruses. So this Bitcoin is like a beautiful virus, right? It's a mental virus that makes you better instead of worse. And so all these network properties come together to explain why we see the power law. And it works, it's incredible. Everything is so precise. 1% difference by combining these two things that you will think are unrelated, to the general price behavior, instead of they are related in a very strong, powerful way. So it's really, really interesting. And when there is I zoom in so you cannot see it, but if I zoom out, I also included this component of this entire interesting system that is all about networks, but is also the machines, because let's not forget that there is another component. There is not just a social network component, there is also the machines, right, that are running Bitcoin, and they are doing the proof of work and everything. It turns out the relationship between the hash rate and the price is also a power law. And it goes hash rate equal price square. This is how it goes. The hash rate proportional to the value, right? If the price is kind of the value of a system, to the square. And of course, they interact with each other. It turns out that most of the time is the price that actually makes the hash rate to go up. I did what I use this quantity that is called Granger causality, that allows you to see not really, and maybe Sina can tell us more, but not really if it's called causality, but causality is very difficult to prove. What you can really prove in general, if you want to be very careful, is that one quantity leads the other. And then you are assuming, well, if that quantity is before this other quantity, and there is some kind of link between the two, maybe this is the cause of the other, right? It's a little bit better than two things happening at the same time, because if they happen at the same time, maybe there is a third quantity that can cause both of them. If one is a little bit before, maybe that is the cause, right? Or at least it happens before. You can say that one leads the other. So usually price leads hash rate, and there is only one time in the chart here at the bottoms is the other way around. So there are these tests that you can do. You can do it in a moving window to see the relevant times, and I was able to demonstrate that actually hash rate drives the price at critical times that are a big bottom, in a very, very narrow region around the bottom. It is really fascinating, right? Because again, it's all like putting all these pieces of a puzzle together. But all these things really interact like in a loop, right? They are all interconnected. We have all this beautiful power law at all the different levels of Bitcoin. So it's a very important way of understanding. It gives you a full picture of how Bitcoin works. It's basically a network that involves both people and machines, and they're all driven by power laws. So these power laws are not just another type of fitting. It's something that tell us something about the DNA itself of Bitcoin, what Bitcoin is, how it works, how it interacts with the world. So to go back to the original question, yes, the external world is included, because you see, every time something happens to this network, it happens proportionally to where the network is. So even if there are external events, maybe they can accelerate the adoption, right? You can see here there are little bumps, right? These bumps are associated with, for example, the bubble. So in that time, the more people get excited, so you will see about a bump in adoption, but then it goes back to the general trend. And so for anything else, basically, why one way of thinking about this, why the ETFs came in this particular here, right? We had a conference in Santa Monica, and I had it's nice to interact in person versus online, because you can actually see the person, you can talk. Initially we had almost an argument, and then we went outside, for the break, and we became friends because it's easier to communicate in that way. But he was pushing back on this idea, right, that everything happens proportional to Bitcoin, because it takes time. It takes time to process it, right? But then I was able to at least not convince him maybe 100%, but at least he understood better what I was trying to explain. But I'm trying to explain that, imagine Satoshi, right? Satoshi, why did he was able to involve only 3 people, right? Because this is what the equation says, but where the equation comes from. It comes from we had a small network of friends, few people could understand Bitcoin, it didn't do much, right? People still were debugging it. So this is all what he could do. He could bring just 3 people. Now, once we were 3 people and all of them were 4, they could bring in 6 more people, right? And now we are a little army, right? We are 10 people. We can do more, right? We can bring more people in, right? You see how it works? So every time something that happens, the number of people involved, the type of investments, the type of infrastructure, everything happens proportionally to this process. We will not
And that's
see.
because this is talking about a fundamental human concept, fundamental, even not a human, like pretty much universal. But we as humans, we also behave like that. We will trust things after we see many other people around us adopting them. And you can even think about things like institutional adoption. That also follows a similar pattern, maybe slightly different parameters. But for example, first you get the first ever billionaire in Bitcoin, maybe in 2013 or so. And if you go all the way back, at that point, Michael Saylor was against Bitcoin. It was calling it a dying technology or something like that.
Yeah, he would
But
say something like, it will go the way of online gambling. This is what he said.
And then you have a few first billionaires, those talk to other billionaires and they learn about it a little bit. Maybe they adopt it more and more. And then this just grows slowly. Paul Tudor Jones come in, a few other famous folks come in. And then suddenly Michael Saylor hears about it again. And then now he's hearing from several of his people in his network. And then he takes a position. Then a few years later, several companies try to copy Michael Saylor. Now we have several micro strategies. There's Meta Planet in Japan, right? There's all sorts of institutions in the US. Then we suddenly get many more institutions. There is this Semler Scientific, a public company in the US that's taking a position following a very similar but a lot lower profile strategy to Michael Saylor. So one Michael Saylor grows into several Michael Saylors, and then that causes even more Michael Saylors to happen, right? Yeah.
And the micro Saylor, one way of understanding, right, because we are talking about individual event here, you can think that he is equivalent of 10 people or 100 people, right, joining the network and so on. So it's all happening according to this pattern, because otherwise you will not see this pattern. You see how a physicist reason. He starts with an empirical observation and he says, oh, this is happening, this is real, so it needs to be some kind of cause, and this is the cause. And another example that I can give you that maybe brings home a little bit more what I'm trying to describe. Think about a snowball, right? The snowball starts little, and then as how much snow it can catch depends on the area of a snowball. It will not be able to go from a small little snowball to a huge big snowball in one instant. It does it continuously, right? As it rolls down, it attracts more snow because of its surface, and then it becomes bigger, so it can attract more, and then it can attract more, and you can attract more. So this kind of process is exactly what happens with Bitcoin. Now, being that is really, you can write an equation, everything, there be a little bit, maybe sometimes the snow is a little bit softer as it goes down, so it doesn't do exact, but in general, it will be very smooth type of process. With human beings, because we are complicated, etc., very big, China ban, etc. This is why we see the bubbles, we see this, it's not perfect, etc. But in general, see, one extreme is saying, oh, everything behaves exactly like a physical system. That would be crazy. The other crazy stuff is, oh, humans do whatever they like and please. They don't. We do behave like very fuzzy particles, that have some,
Yeah, we are
individually.
people give ourselves too much credit. Just look at how fashion works.
Yeah.
People simply spend a ton of money on the stuff that they just see other people wearing, right? So we
Yeah.
actually can behave in a very predictable way.
In a very, look, there is an entire industry that is the insurance industry. They spend millions and millions of dollars paying analysts studying exactly the patterns, right? If you are a male, probably you have more accidents because you take more risk. And if you are traveling a lot, you're going to have more risk. If you live in a certain area of a city versus this other place. So they study all these things about human collective behavior, because that is one of the strongest pushes back. I put one time I put this questionnaire, right? This poll, and say, okay, what is your big what is your mental resistance towards the power law? And most people say humans are predictable. No, it's not true. The humans are unpredictable, not at all. They are fuzzy. There is a lot of noise, but In the noise, you can find the signal. That is the entire idea behind this. And it's true. There are thousands and thousands of papers showing that, for example, cities, right? Cities is one of the social phenomena where we see this happening all the time, where, the pattern that you observe. In fact, I think do I have a slide for that? No. But I posted online many times. There are these graphs that show that the GDP of a city, the number of gas stations. Can you imagine the number of libraries, all the different important things in a city? They grow as power laws. So do you think is there a committee that say, hey guys, according to this physicist, they wrote this book, we should behave like a power law. We don't have enough gas station in this city to, for the quota that follows a power law. Let's make more, right? Or less or whatever. No, it happens naturally. It happens with all these iterations that I just described in a very similar fashion that in the end produce this phenomenon. And it applies to social phenomena very well, with a little bit more fuzziness, right? But it applies. So it's an undeniable fact. And the fact that Bitcoin follows this, I find it beautiful and fascinating. And is also very important. Why? Because it turns out, right, for example, if you read this very beautiful book that I suggest everybody to read, the guy also has lectures online, like a TED lecture. It's about 10-15 minutes, so it doesn't take much time. Please watch it. It's called, you can Google it, it's called The Surprising Math of Cities and Corporations. And he compares these two entities. He compares the cities that I just described, they follow power laws, they are ruled by power laws, and then corporations. And he says, try to find any corporation that is older than 200 years. You will have very hard time. If there is one or two, or maybe no. In fact, he says there is one that survived more than 200 years, that is the Vatican. So he's making a joke about that, right? And they survive for other reasons, that. But otherwise, all the other companies die. And guess what? Companies grow exponentially. And you can show it. He has thousands of diagrams showing the growth of company in his book, in his lectures. And they all follow power laws. They all follow exponential. They go very, very fast. They have this different pattern. You know what is the difference between a power law and exponential in terms of this equation that I described? It doesn't have that term T. It doesn't, a power law will only be, so if you did this, if we redid this, and if it was an exponential, see, every time we divide by the age of a system, we will not do that. And that, if you do that, and you do a graph of the growth of this network versus time, it will look like an exponential, not a power law. That is the big difference. They are similar, but one has this curbing age, divide by age factor, and the other doesn't have. And you will think, well, I don't like it, because I don't want the system to slow down, and I want to divide by that factor. But Bitcoin likes it. It chooses to do it in that way, and nature likes it. And cities like it. And you know why? Because in one end, cities are eternal. This is what Jeffrey West always says, the kind of a slogan that he uses in his book, in his lecture. He says, cities are eternal. They last forever. Look at Rome. Once they reach a certain critical mass, they continue almost forever. Like Rome is a 5,000 years old cities. Paris, London, very, very old cities. And there are cases where you destroy the city and they come back. And think about Hiroshima and Nagasaki. They nuke them and they came back to life. Right now, you go there, and besides some monuments telling you that there was a nuclear explosion, it looks like a normal city. It works, operates. They are very active cities in Japan. And so cities are eternal, and corporations that follow exponentials die. And why they die? Because exponential grows so fast that at a certain point, they don't have any more resources to sustain their growth. And so they collapse. And that happens everywhere. Like, for example, cancer inside the body grows in exponential fashion. Many viruses, when they destroy their host and they are not curbed, if they are curbed, they become power laws. If they are not curbed, they are exponential. And they are very deadly. They can kill an entire species sometimes. So many bad things are associated with exponential, and good things are associated with power laws. And Bitcoin is a power law. Bitcoin somehow, through the wisdom of interactions of the Bitcoiners, the infrastructures we're creating around it, choose to be a power law. And it's a good thing, because imagine you're having the same growth you had when Bitcoin was $10. The system will not be able to sustain that in terms of the security of the system, the mining infrastructure, the type of institution that come in, and the regulations. The law is relatively slow, and this institution, they want a framework where they can operate, right? All the different things that are happening that support Bitcoin growth need to take time. So this scaling idea, right, at every stage, every time we go a factor of 10 up, is taking longer and longer time. I know it sounds boring. It sounds, well, I would like, to become a millionaire the day after tomorrow. But if you come out a little bit from your selfish desire, and you care about Bitcoin as a system, as something that other people in other generation can benefit from, then you should celebrate what is a power law. That is exactly the type of growth that you want for Bitcoin. You want to be eternal, like cities, and not dying like corporations.
And
So
I wanna emphasize what you said by slowing down. This doesn't mean Bitcoin will not be growing fast. It just says, for example, here I took real data points, which is kind of one way to say this is one implication of the power law model. But I looked at the specific dollar prices over time to empirically show this fact that you said. Bitcoin has been, for example, over the last 10 years, 15 years, it's been, you can identify periods where it multiplied by a factor of 6 in price. But those just took longer and longer. So it still grows very fast. It just, it takes longer on a linear scale. But on a log scale, it's the same speed, right? If that's right way to put it. So, for example, here you can see that in from 2011 to 12, I identified a period where the age increased by 40%, and then I saw that the price went up 6x, from $1 to $1 and something to $7 and something. From there, another 40% increase in age got us another 6x, and then another 40% increase in x, another 6x. So every time we increase 40% in age, the price goes up by a factor of 6.
Yeah.
It's just 40% increase in age just takes longer and longer every cycle.
I love this slide. And by the way, percentages are related to logs. This is why you have 40%, 40%. So in one end, from a percentage point of view, nothing is changed. That is why in physics, we call this scale invariant, right? So the scale, that is the percentage or the number of zeros, whatever you want to call it, it's a related concept, stays the same. You see that number in one end that says, I didn't change anything. I'm doing what I've been done from the beginning. But human eyes, unfortunately, because we are very linear beings, in some things, I will tell you, by the way, how much time do we have left? Sina, I don't want to.
So I canceled what I had after this, so we're good.
Okay, so I want to give a couple of examples where humans are non-linear and we don't even know. We are very logarithm in these two things. But in general, our perception of time is linear. Maybe if we lived like a mountain, a mountain lives millions of years. Maybe if we live millions of years, our perception of time will be logarithmic. It will be the same thing that Bitcoin says, I don't care about human time. I'm going on my own time. That is this logarithmic time. He likes Bitcoin likes logarithmic time. It's perception of time. If you want to think it, you want to make it in some kind of individual or living being, it lives on log time. And this is a beautiful thing because maybe people are more familiar with percentages. And you see how it shows. This graph is wonderful. Seen as a talent to make things complicated simple. This is one of the things I love about him. But see how the percentages are the same. So in one end, nothing changes if you look at from a percentage point of view. And also the change is the same, right? In in growth. But because it's the same, it keeps this the same. You will have, if it took the percentage in price, also these, you will see they will grow. It will take longer and longer time for that change in percentage. But because it did it in pair, it looks like these one are constant, right, in this linear fashion that humans are familiar. But that means longer and longer times linearly on the time scale. And that is exactly the idea. Like, for example, another way of thinking is that, remember, if we round it up, we can have the power of time is 6, right? So every time we double, so if you take 2 to the 6, it's 65. So if you take the age of Bitcoin and you double it, you will expect a change in price that is 65, right? Because that comes from 2 times to the 6, 65. 3 times to the 6 is, by the way, 720. That is crazy, right? You triple the age of Bitcoin, you're going to get 720 times. So imagine you are year 2, right? So you waited 2 years from when Bitcoin was created. And then you wait other 2 years, the price will go 65 times up. It is amazing, right? You made 65 times your money in only 2 years. Now, do that now. Bitcoin has existed for 15 years. You will need to wait other 15 years because you need to double the age of a system to get that 65 years. So 65 pair. So you will have to wait other 15 years. So that is still amazing because that means in 15 years from now, we will have Bitcoin being 65 times more. It is right now we are around 60,000, so about close to $4 million. So this is what we are expecting. This is one of the things that Power Law allows us to do, this kind of calculation. How long is going to take before we reach this in such a amount of value for Bitcoin? So in 15 years, we got to $4 million. But you see, it's going to take 15 years, while in year 2, it was going to take only 2 years to go 65 pairs. So this is how it works. Now, I know it's not something that some people like. A lot of people resist the idea of a power law. They are not fan of a power law. They want to believe it's not real. It is real, first of all. And the other thing that they want, when they accept it that it is real, they say, well, has been real so far, it's not going to be real in the future, because we are expecting something crazy happening. But we just describe how everything happens to Bitcoin proportionally to where Bitcoin is. And it's something that has happened in that way, and it will continue to happen, because we are not talking about, well, this is how it was. We are talking about the mechanism, exactly what is making Bitcoin grow. It will not have been here if Bitcoin didn't work in that way. And there is no reason to think that that mechanism is not in place also in the future. Because another way of thinking about scale, because thinking about scale changes everything. It changes your way of thinking about Bitcoin. We went through the history of Bitcoin through 8 order of magnitude. What does it mean? If you look at, in fact, if you don't mind I want to go back to my original slide where we can see this, right? So you see how here we are showing all the different
Again,
scales.
we need this to be zoomed to
We are showing all the different scales, right? So if we go on the left side, you can maybe see it better, right? So we went through all these scales, right? 10 to -1 means 10 to the -1. And here I'm actually starting from July 18, 2010. This is when Mt. Gox started to do trading. And this usually when we show the data, because it's a very reliable time when we started to go to get data. Before that, the data were not very good. Is why we usually don't show. But the idea is that we could go, in theory, all the way to where Bitcoin was created. It was January 3, 2009. It will be here on the left. And I do have some graphs where I took some of the early transactions. In fact, the earliest transaction ever, it falls on the power law. I never include that transaction in my in the creation of this graph, but if you go back retroactively, it does fall very close to the power law. And that transaction was $1 for 5,000 Bitcoin. That is kind of crazy, right? Now, if you include that transaction, and you include where we are right now, that we are basically
Which one is it?
here.
Talking about the pizza or something else?
No, it was before that. Is I don't. And I am so bad with name, but it was one of these early collaborators of Satoshi. In fact, it was the person that helped him, and maybe people in the audience know, so maybe you want to write it down. Is that guy that also had all this email exchange with Bitcoin, with Satoshi, and then helped him to create Bitcoin Talk and so on. And one of the things that they discussed in the emails was, oh, we need to have a way for people to go in and out of a Bitcoin world, right? We need to create some kind of use case where we show that you can actually transform Bitcoin into dollars and back. What can we do? And so he started to basically do that. He became like the first bank in a certain sense. So he was mining Bitcoin because he was one of the early people involved. He had all this Bitcoin. And so he started to put them for sale, and people were sending him PayPal money and whatever. And so one of the first earliest transaction ever was this announcement that he made on Bitcoin Talk, where he said, "Guys, I'm going to sell 5,000 Bitcoin for $1," and that was early 2009. Sometime in 2009. So if you include that transaction, we are talking about a change between then and now of 8 order of magnitude, or 100 million times. So Bitcoin basically went from that early transaction to today 100 million times. Okay, that is so crazy that if you want an analogy, I made this analogy where, imagine we bring this probe from space and it caught this weird material from some kind of strange object that we think maybe is some alien creation, right? We came back and then we studied this little grain of sand that is 1/10 of a millimeter. So you need like a magnifying glass, right? And the scientists study, and the object grows. Do you remember that funny movie called The Blob, from the 50s, where this thing grows and grows and grows? It's a kind of a B movie from the 50s called The Blob. So this thing does the same thing. It grows and grows and grows. And it grows so fast that at a certain point we needed to put it outside because otherwise it will destroy the lab. And it goes from being a little grain of sand all the way to Mount Everest. Imagine that. And it does it in 15 years. And not just that, if we go back to the graph, it does it in this very, very regular fashion, right? It does it in this, what is called scale invariant way, because remember, in one way, with your beautiful graph, you showed that, yes, it takes longer and longer time, but if you're thinking in terms of percentage, or if you're thinking in terms of scale, then it looks the same. And why I say it looks the same, because the relationship between these two quantity, times and price, it's a line. And a line means, that is exactly what a line means. It means a proportional, constant relationship between the log, and log means scale, the scale of price and the scale of time. That doesn't change because a line has a constant slope. So that relationship between the two is constant or invariant. We use this fancy word, we call it invariant. Maybe we should call it scale constant or scale invariant, because invariant it means it allows for change, but also the proportionality in the change is not changing. So it's invariant in that sense, right? So it's a beautiful thing. This is why we have this straight line, that there is something consistent, something that doesn't change, that is how Bitcoin grows in terms of their scale. And it's a very powerful property. And by the way, scientists in general are the most confident, because see, doing science is also making prediction, because we want to, this is how we know that we understand something, right? If I understand the laws of motion, I should be able to tell when the new eclipse is going to happen, right? It's going to happen. If I understand the solar system, at this particular time, at this is how they can announce to us, right? Say in this date, at this particular time, in this particular location, you will be able to see a lunar eclipse. You will be able to see a solar eclipse. And in ancient times, you will have been considered a magician if you could do that, right? They could not do that. They didn't know how to do that. Or they did it with the, fake astronomy that they had at the time, but they could miss it by many hours, many days sometimes. But you can do it at the second level, right? We can do it very precisely. And same thing when you send a probe to Mars, you're going to land in a very precise spot because you made a prediction of a path of a probe. So science is all about making predictions. And one of the places where we feel most confident in making predictions is when a system is scale invariant, because the system tend to continue to be scale invariant, simply because the mechanism that are creating the system, like basically the snowball, they will continue to operate. And this is why we feel very confident. We can never be 100% sure, but we have a very high level of confidence that this system will continue to work in this way. It would be very surprising. Now, if it doesn't something else, Bitcoin does what Bitcoin does. We will have to, as scientists, we don't have anything ego-like here. It's not that I am associated with this model, right? Also because, listen, I already kind of written my name in history because Bitcoin has done this for 15 years. So one day when kids will study Bitcoin in schools, and it will be like one of the most important things in the world, we will have to deal with the fact that Bitcoin for 15 years was a power law. Why? What is going on? People will want to understand this. But we feel very confident that we are going up like this with this scale invariant property. And I was telling you that in one end, people say, oh, we are very early. And I always say, no, we are not early. We are 85% there. What do I mean? If you see the history of Bitcoin in terms of the growth through the scales, right, where we went from 10, if I go all the way to that early transaction, this number will be -4, because it was basically, if you round it up to the closest 10, is 10,000, right? 1 over 10,000 is 10 to the -4, so you will get 4 decimal places, and so it will be -4, right? So we go from -4 all the way to 4, that is 8, actually almost 5, so 9 order of magnitude. It's crazy. It's completely absurd. So imagine, where are we going? Are we going to Bitcoin being $1 million, $10 million? I think because of this philosophy of everything happens proportionally, by the time Bitcoin is $10 million, that means about $100 trillion market cap, that will be close to the entire wealth of the world, within maybe a factor of few. By the time we go there, nations, large nations, not small nations like El Salvador, that are paying attention now because they are small, and so that is where they came in at this particular place, when they because their GDP is on the order of a few $billion, so they look something that is trillions of dollars. Oh, let me invest in it, right? By the time you get something that is hundreds of trillions of dollars, then huge nations like Russia, China, United States, we are going to say, okay, we cannot defeat this thing, let's join it, right? So they will probably peg the dollar to Bitcoin, they will adopt Bitcoin. This is when the hyperbitcoinization likely will happen, because this philosophy also helps you to see things like this in the future. When am I expecting some big, huge event like that to happen? It's all the way around. The people say, oh, well, what if tomorrow they unite? It's not going to happen tomorrow. There is no infrastructure. There is no the motivation, because Bitcoin is not big enough. If they do that, if they jump in, they will push the price so high that they are going to get a bad deal. So they are going to wait until the impact of a large nation on Bitcoin is going to be proportional to where Bitcoin is. This is how it works. Put it in your head. I mean, if you have a better theory of that, please go ahead and do it and show me the data. But all the data, the logic, the thinking about this, it's consistent and coherent with this idea that everything that happens to Bitcoin will happen proportional. So by the time we are $100 trillion, big, large nations will join in, and we can even tell when it's going to happen, about 19 years from now. We can predict that. Now, is it the exact year? No, maybe 1 year more, 1 year less, around that time. And if you're thinking about scale, that is only 2 orders of magnitude away. So we went through 9 orders of magnitude. We have only 2 to go. So that is close to 85% of the process. So we are not early. That is actually a good thing, because that means we are close to our goal, right? Because everybody would like to live in hyper Bitcoinization world. So we are not far away. Maybe it's 19 years, so it looks like a long time. But from a scale point of view, it's only 2 scale. So do you think that the system went through this process for 9 order of magnitude is going to change in the next 2? It sounds ridiculous. It's absurd. From a scientific point of view, it doesn't look like a good hypothesis. So it's a much better hypothesis to say, and it will continue to be scale invariant for the next 2 orders of magnitude. It's a much stronger scientific hypothesis. It's an hypothesis. Take it like that. Let's see if it works. But I think we have a data, we have a reasoning that tell us that.
Only thing in the long run, the only thing that might change is if there is a resource exhaustion, like there is some sort of other force that comes into play as we get to the maximum potential. For example, you can think of Facebook's growth. And the other day I teach this a lot in class. We look at Facebook growth, and they're now at something like 3-4 billion people signed up on the platform. So there isn't just enough any more human bodies that they can bring online. And because of that, now their growth has been kind of plateaued, but they grew like just super fast for several years. But
it's a good point. So can I reply to that? The reply is this. That is also another thing that many people don't think about. We don't need to convert the entire world because of these non-linear effects of a network. What do I mean? If you look at the number of addresses, right, and like we say, it's a proxy, right? But how many people really are joining the network? Probably, there are different estimates, etc. But probably on the order of 100 million people, right? And you can add a factor, 2, 3, whatever. But it's on the order of hundreds of millions of people, no more, right? It's not billions. Now, what will happen when we go a factor of 2? If we go to $100 trillion and we are saying $100 trillion is the critical event that will make us, this story by event will end, right? Because the day a big, large nation like United States adopts Bitcoin, then there is no anymore a story of how the dollar, how Bitcoin went and became the monetary system of the world. It's the end of the story, and there will be a new chapter, right? There will be a new chapter of the book. So now, maybe you can start to describe the value of Bitcoin in terms of other commodity or other things like that. But this dollar versus Bitcoin is going to end, right? This story. So it's basically 2 orders of magnitude. But in terms of adoption, if we are about 100 million people, by the time we go 2 orders of magnitude up in price, that is not going to be 2 orders of magnitude in adoption. It's going to be only a factor of 8, because you have this, basically, if you look at the ratio between how long it's going to take to reach that, if it is only 19 years from now, and you calculate how much more people you need to actually achieve it, because remember, this is growing only with the cube, and this is growing with the power of 6. This one will only be 8 times. So we go from 100 million to 800 million. So there is no exhaustion, because it will be only a portion. It's almost like kind of a core. We will need a core number of people to create hyperbitcoinization. We don't need to convert every single human being. We need just to have a core number of people. So there is no, that, your concern about running out of resources is not a concern. That is one of the beautiful things of having a non-linear system like this, where a small change in the number of adopters creates a huge big change in the price. Now, probably the most concerning thing is hash rate, because hash rate, in fact, grows with the price square, right? So if we go the price by a factor of 100, this will go up with a factor of 10,000 times. 10,000 times most hash rate. Can the computer handle that? I think so, right? Because it's not just a question of more powerful machines, but also a question of how many of them, right? So if the price goes up, there'll be more miners, so there'll be more businesses doing mining and so on. So I think the system can handle 2 orders of magnitude. If we are talking about 3, 4, 5, then yes, we will see something needs to give away. But my current hypothesis right now is that by the time we reach $100 trillion, very interesting things will happen, right? Something big is going to happen. Probably the event that everybody's looking for, that is hyperbitcoinization. I don't see how Bitcoin can go even higher than that, because what does it mean? It will be 10 times more than all the real estate in the world. I don't think it's possible, right? So, but I think this very precise pattern will continue without any problem, because all the resources are there. We have enough time. That is the beauty of the power law, to actually create the infrastructure, have all the machine growing enough, all the mining, etc. All the even psychologically, 20 years is enough for people to start to think about Bitcoin being the center of all the monetary transactions that they do. Government, it looks a small amount of time in one end, but things are going fast nowadays, right? AI is picking up even faster than that. So that is my current idea. But of course, now this is where we go more from the mathematics of it to speculation, right? So people can push back. Of course, they can have their interpretation, etc. But yeah, what do you think about these things that I just say, these ideas that I just proposed?
No,
I
I
don't know
think
if there is any.
if Bitcoin is extremely successful, it will become the basis of the world money, or in a hyper Bitcoinized world. Then theoretically, the maximum value that it has is the total wealth in the world, and that only grows by 2% a year, right?
Right.
And then because we're not producing any new Bitcoin, then Bitcoin is expected to grow and at an average of 2% a year. But you will not feel any of that effect, because the production and GDP also grows by the same amount. So at the end of it, you will see that your purchasing power will just stay the same, and Bitcoin will remain being a wonderful store of value with very little volatility. The only volatility will happen because of psychological social effects, where might make people to try to hoard more Bitcoin or hoard less Bitcoin. Otherwise, there's no supply effect, and it will be a lot more tame. And but yeah, up to that point, I agree. It's going to be a very, very, very long time before we reach there. So there's several orders of magnitude of the power law behavior that can just go on. And in that sense, in linear chart, we are very early. In logarithmic, no. So
Right.
it's a very interesting way to look at it. Let me answer a couple questions. Amanda on
Sure.
Twitter is asking whether this is available later. We are live streaming on YouTube and Twitter. So if you go on 21st Capital YouTube, it's going to be there. Also going to be available on Twitter. The same link that you're watching at going to remain there. A very common question which is I'm sure you love this one. You said with doubling the age, the price will 65x. So is that with or without inflation? Because whenever you talk too long into the future, people ask, okay, numbers will change a lot if you include or exclude inflation. What's the answer?
Right. The answer is this, right? When we feed this data, we feed it what is called the observable, right? The observable is the price. And this is why this is very physics-like approach, right? We like to go directly to the quantity we can measure. And then we want to see what is the relationship between the quantity we measure and another quantity like time, right? You have a clock, you have data. And so And then once you have this information, you can try to interpret it, you can try to do side analysis and so on. So the price here is what? Is the price of that particular date, right? So I know that the price, like $100 Bitcoin in 2010 or 11, wherever it was when we reached that value, was different from $100 today. But that is what the relationship says. It says there was this very precise relationship between the value of Bitcoin at that time and time. So when I make the projection and they say Bitcoin will be $4 million in 15 years from now, that is the $4 million of that time, whatever that means, right? Now, you can always do a side calculation and say, okay, given this rate of inflation, etc., what that $4 million means. You can always do that. You can always adjust it. Now, why I didn't include it in the model? Because it will make, I will make a model of a model, right? Basically, the projection of what the inflation will be in the future will be based on some kind of assumption from my side. So you make your own assumption. Is it 3%, 4% a year? Make your own assumption, and maybe then you can have different scenarios. Say, well, that 4 million that the power law model predicts will be the equivalent of today's $2 million or whatever it is. So you can always do that on the side. But the model assumes that whatever relationship has been between price and time will continue, with the understanding that is the price of Bitcoin, whatever that price means at that particular time. That is a consistent interpretation of what this relationship means.
So excludes inflation, you can add it back yourself, just adjust it for that. Just quick point, yes, Leonard is right. I just said your purchasing power doesn't go up, but it does go up in a Bitcoinized, hyper Bitcoinized world. It's just your share of the world's wealth will stay the same when you own Bitcoin. Another
that is kind of the opposite of what happens today,
exactly.
Because that is the entire
Absolutely.
idea of having
Very good
something
point.
that is
Very good point.
deflationary instead of being inflationary, right? That you're actually that is kind of the point of some people have explained that is the ultimate power of Bitcoin, that you will start to get your right of the war, right? That you will get a share of the wealth of the war. That is what wealth is supposed to mean, because of all the horrible games that central governments do. We get the opposite, right? We
But
get less and less, right?
They steal the top of the cream every time economy grows. Your money should buy more, but they, in theory, they want your money to only buy the same amount. What happens to the difference? That's stolen. Now it doesn't even end there. You typically also are able to even buy even less over time, right? So they every year they skim like 2%, 3%, 4% off of the economy and use that for whatever they want to spend money on. Dr. Freud asking about your liquidity chart. We didn't talk about it, but I guess we should in another episode.
We can have an episode to focus on liquidity, yes.
Have you done anything new recently on that?
I started to look at more in details. For example, what contributes what. That is one of the interesting things. I also look at possible correlations at the level of smaller cycles beyond the 4 years, or how the 4 years interact with longer cycles. I worked on it, but I didn't come up with any real breakthrough yet. But one of the things I want, maybe we can discuss if we meet in some in next episode, is what is going on with this particular situation. Because one of the things I see is that, differently from all the other bull run, we don't have enough liquidity right now. Now, I don't know if it is going to change in the next month. My models say that usually the bull run starts in November, December of this particular year. And so we have time. But right now it's different from all the other bull runs where we have enough liquidity to actually support the bull run. This time we are lacking that. So I don't know. It's interesting, and maybe we can discuss it together. I don't know what you think about that piece of information. But right now, What happened is that the enthusiasm associated with the ETF push us a little bit too far away from the support level. Usually the price is much closer to the support level. We went a little bit too high, and that creates a disconnect between liquidity and the price of Bitcoin. So I don't know how to interpret that, but it's an interesting fact.
This is where it is. I suppose we weren't supposed to go out of the lower bound that soon, but this whole jump that you see from blue region to green was the ETF. So now,
and notice what happened. We reach the middle. Maybe it's just coincidence, but it's kind of interesting that we reach that yellow line and we came back.
exactly, like I broke down the probability space to 33rd quantile and 66 quantile and 99, and you see for some strange reason, the one thirds of probability also matter a lot, and with some a little bit of error, a lot of these retraces appear to be following these lines. So there is one comment that says, yeah, Dr. Freud was saying he expects a retrace to 50. I think we already I wouldn't be able to like predict the future, but at least from this model that I've created, these are the ranges we are expecting. But I'm not trying to do any timing here. I know Giovanni does some of the timing work, so maybe we can talk about that later as well. But we have actually we are paying back the extra run up that ETFs gave us. So we have to go through this slow process for a while to clean up all the enthusiasm, as you said, and build a nicer base for another run up. And on a linear chart, you see how much potential exists, but we still haven't seen most of what's happening. Another thing is all the easing that's happening. There is a ton of money that has been stuck parked in the last few years in the money market accounts or at treasuries, especially front end of the curve, that was paying 5% or more annually. Now that is coming down, and the Fed has only cut by 50 basis points. That's not enough to make a huge splash. But as they cut more and more, investors will get the memo and they'll begin pulling their money out and allocating it to different financial investment. That's a sensible, logical thing to do. Now your money is returning a lot less. So little by little, because there is inertia, not everyone will do it at the same time, but slowly all that parked money will come out of the bond market, will come out of the money market accounts and be allocated to riskier investments. This is just happening a little bit of slow, and as the Fed cuts more, it will happen faster and faster. There's an interview by Paul Tudor Jones. I should watch it. I haven't. People seem to be a FOCO investor. Thanks for reminding us about that. But I guess how do we want to wrap it up, Giovanni?
Yeah, So I think this idea of networks give us an insight about Bitcoin that is very powerful, and it tell us about the real nature of Bitcoin, what it is, right? It's all network property, and it makes it different from everything else, because even Facebook, you were mentioning, Facebook for some time behaved like a network, but then it's a different type of network. Maybe I can give you this idea as a final thought. There is a network that we are familiar with, that is the body, right? The cells, at a certain point, decided, okay, we don't want to be living by ourselves. We want to join forces and create multicellular organisms. Well, actually, in the evolution of life, was a very, very important phenomenon, almost a critical phenomenon. And notice what happens. I don't think it's very likely for one of the cells of my liver to decide and leave a network, right? I'm going to, everybody, guys, I'm going to live my own life. Goodbye, right? That kind of like what cancer does a little bit. But so it doesn't happen. And why? Because the connections in the network itself is where the value is. And with Facebook, that doesn't happen, because or happens up to a certain point, right? You have your friends, you have your pictures. It's a big deal to leave a network of Facebook, but people do it, and they did it, right? Right now, if you go to Facebook, like, it looks like dead, right? Many activities that I was doing before, the groups, etc. But almost nothing happens, and people are coming to X, right? But with Bitcoin, that is almost impossible, because that will mean a collapse of the value of the system itself. Now, sure, maybe an individual can do it, but in general, the value, it's in the network itself. So it's self-sustaining in a certain sense. And so this is what it makes it, right? Even with the cities, why cities are immortal, because exactly of that. Sure, some people leave a city, some people come back, but in general, on average, the city support itself, because this is where the value is. And as the city grows bigger, it is even more valuable. It attracts more resources, it attracts more people, more talent, and it continues like that. It's very difficult to kill a city. And same thing with Bitcoin. It's basically an unstoppable process at this point. So it's very, very interesting to start to see. I invite everybody to start to see Bitcoin as this incredible network that it's a collaboration between machines, humans. We are all part of it. So it gives us insights that you will never get if you see Bitcoin as an asset or other way of thinking about Bitcoin. So you start to think about scaling network, because I think it's useful over the long term to understand Bitcoin in this particular light.
Awesome. Thanks a lot. I appreciate it. We went for close to 2 hours, and we have 1,000 viewers across all channels. This is amazing. Thank you guys for being with us. This will, of course, remain on wherever you're watching it. You can come back to it. And we were very fortunate to have so much interesting ideas from Giovanni. Thank you very much for joining, and
My pleasure.
yeah, and wonderful material. And I look forward to us chatting more.
Thank you so much, and thank you to all the viewers. Bye.